Speaking of IPOs, there's this thing that's always intrigued me, which is they may not explicitly say it, but there's this sort of general understanding that the bankers and the company that's coming out will always leave money on the table for investors. So, but why do you think that there is a lot of people have that?
They don't anymore because of the PE guys. Previously, we were able to, when I was in Alliance and I was the biggest fund manager of India, I would tell the companies that you are, that time the company fellow used to own 100% or 80-90%. And we'd say you are selling 10-15%, give up 10% only of that, because fund manager is happy you make 10% on day one, and then rest you are okay. Now the other side is a financial investor, and he's just squeezing the hell out of it. I actually thought that the mutual fund industry should form a union. I think it's legally allowed to say in the press that we are not buying any PE funded IPO, go to hell.
But tell me something.
But they don't do it, I'm just saying jokingly, but absolutely right.
But this is such it seems so obvious that they should not be buying. I'm not talking about any individual, I'm just saying in general. But you have the biggest name mutual funds on the QIB.
And some of them are known that these stocks will not work simply because it's very easy in some cases, not every case. Yeah. If last year when this correction happened, all the listed guys were down maybe 50, 60 or even more. Like Paytm had gone down from 2000 to at that time maybe 700-800, then it went down to 400. And then Zomato had gone down, not from the IPO price but from the high. So they were all down 50-60%. And still a new IPO came, which was maybe 50% higher than their last funding. I won't tell you the name. And I said there is not a chance in hell that this stock can open up. And the stock opened up and stayed up and finally is below the IPO price. Delivery. Why did you need any deep research that when you are a manufacturing company and you raised your last money at some 100 rupees and in 10 months you are coming at 670 rupees. It is not that during this time you discovered cure for cancer, which means that suddenly your valuation went up. In manufacturing, you suddenly made 33 more planes or whatever you want to call these things. And it's a manufacturing company, so it's not that you discovered anything for suddenly pop. But the world is willing to pay 6-7 times more with a grey market of 40%.
It's not that, forget the retail. I'm saying there are fund managers with 30 years experience.
So that is why sometimes I like this, because we can only outperform if others underperform.
You're not outrun the line, you're outrun the other guy.
So one part of outperforming is that the other guy is like tennis.
Right.
You normally don't hit the winning stroke. The other guy just puts it in the net.
Right.
And it's that is enough. So once, in the olden days when people would come with stocks which I used to think are bad, I used to say, I say I don't like it. He'll say, sir. I said, no, you're a good man. You are my Trojan horse. Make sure that this stock lands up in other people's portfolios. So that was way off.